Welcome everybody to the Everyday Pro Investor YouTube series. We finally got Brian and Evan back together here this week. We're going to go ahead and talk a little bit about the markets, what happened last week, a couple individual names, and what we're looking for in the weeks ahead. So I guess, Evan, let's start off with the early news in the week last week, which is Russia came out. They said, we've got a approved COVID vaccine, which I don't think the market reacted too much to, but at the same time, gives some people some hope. But when you dig into the facts, I think they only tested this thing on about 100 people. And, Vladimir Putin's, my daughter's had it, this, that, the other. But what did you make of that whole situation?
Yeah, I mean, to your point, I don't think there was too much reaction. And I actually just didn't really react to it as well. I just thought, okay, we'll have to wait and see if this is true or not. If, in terms of an approved vaccine, you think, does the vaccine actually work? Does it accomplish what it's trying to do here? So we'll have to wait and see. I don't know if they released the results of that test or not. I didn't catch that. Did they?
No, from what I've seen, the data has not been shared with anybody. And so, I mean, it's all very, suspicious, I guess. I mean, Russia, they're much like China, right, the way they operate. So it's pretty hard to believe what they're saying. I do wonder, though, we had the U.S., was it the next day, I believe, they announced that they were purchasing 100 million doses of the Moderna vaccine from Moderna, that hasn't even passed phase 3. So interesting development there. But do you think that kind of forced maybe our government's hand a little bit, having that announcement, or do you think that was already in the works?
That announcement to me was surprising, and I was sitting here thinking about, I wonder how they structure that deal. Is it like an option of some kind, or if the vaccine doesn't pass the phase 3, I don't know how that would work.
Yeah, I'm honestly not sure either. I mean, if it doesn't pass phase 3, then it's a no-go. I mean, the government's already given them a ton of money in developing this vaccine. I mean, not just Moderna, but several companies, Pfizer included. So I would think that it's just contingent on getting approval. To me, it makes it a little bit, it's strange. How can you, it's a conflict of interest, I guess that's what I'm trying to say, is you want to get this thing approved because you want to give it to the people, but at the same time, it's not approved yet. So are you going to look at the vaccine through the same lens as if you hadn't already planned on buying it and giving it to people? I find that a little bit interesting.
Yeah, it's a good point. And we had unemployment claims were under the 1 million mark for the week, which is the first time since the pandemic started. So positive news there.
Yeah, I think that was, on the economic front, the data's kind of getting flat, and I think that was nice to see that on the jobs front, still making a little bit of headway. Don't get me wrong, a lot of people are still unemployed, but at least we're making some headway there.
And then we had Tesla come out. They announced their 5-for-1 stock split. So this sent the stock higher for the next several days last week. You want to discuss a little bit what the effects of a stock split is and what it means? Yeah,
I mean, this is one that, Apple just announced, what was it, their 4-for-1 a couple weeks ago. The stock shot up. I mean, the reality is a stock split doesn't change the fundamentals of the company. It doesn't make it worth more. It doesn't change the amount of earnings per share. It doesn't change the revenue per share. It does nothing for the company. Now, in the old days, they used to do the stock splits because, let's say like a Tesla. Well, Tesla's a perfect example. Not everybody has $1,500 to go buy one share, right? And people are going to be more inclined to buy shares if the price is lower, not because they can afford it, but also people want to go out and they want to buy in larger quantities. I mean, the reality is let's say you did have $1,500, and buying one share at $1,500 is the same thing as buying 10 shares for a total of $1,500. Either way, 5% of $1,500 is 5% of $1,500. But the theory for the retail investor is that they would buy at a lower price, which will help boost your stock price. The thing is, with today's environment, you have basically every online broker allows you to trade fractional shares, whether it's Robinhood, whether it's the bigger names like Schwab, E-Trade, Fidelity. All of them are allowing you to do fractional shares, so you don't really need to do stock splits anymore. But the optics of it still apparently works. You saw Apple just skyrocket after announcing the split. Same thing with Tesla; they've gone up. I actually think that name's going to continue to move higher because it is a name that's got a lot of momentum behind it. Obviously, it's moved parabolically over really the whole course of the year, especially since the drawdown in March. And I just think it's important that people know that it doesn't actually change the fundamentals of the company getting that stock split.
Yeah, the only thing I would add to that, to your point, the larger quantities, I would say for us especially, is being able to hold 100 shares or 100 quantity. So let's say you owned, actually this is a perfect example with Apple, one of the portfolios that I manage, 100 shares of Apple will now have 400 shares. So what's beneficial there is we'll be able to sell 4 calls against the position at any one given time. So a little bit more leverage. Just wanted to highlight that.
Yeah, that's a really good point there. I hadn't even really thought about it from that direction because many of the people can't even afford to buy necessarily 100 shares of Apple. Even at $100, that's still a really good chunk of change. But that's a valid point for those that can go out and buy 100 shares at a time and write those calls against it. Because Apple's a good stock to write calls against your position, especially now. Let's say, like you said, you go from 100 to 400. Say you want to just write 2 calls, and that way, if 200 shares do get called away, you still hold 200 shares of that position, even though dollar-wise, your position doesn't actually change. The number of shares, it does help when you're writing calls against it if you actively manage that way. That's a good point.
Yep.
So
moving on.
Yeah.
Go ahead.
Yeah, so I was just going to say, kind of wrapping up the market for last week, obviously we're right there. We're pushing up against the all-time highs, not just recovering. We're positive again for the year, but we're pushing right back up against 3,400 on the S&P 500. What are you seeing, I guess, not just for next week, Evan, but for the next few weeks? Where's the markets next moved in your opinion?
It's tough to – so we're up against the highs, and you think what could send the market above and beyond the high, the mark. And that's – I think there's only a few things that could do that. It's the government stimulus deal and any positive news about the virus. So until then, I would think we would kind of just trade in a range until we see that happen. That's kind of my thoughts on it.
Yeah, I would agree. I think both of those things are things that could send us new highs. I know we're going to get some retail earnings here in the next week. I don't see that pushing us to new highs because you got to get entire sectors moving in the same direction. And I think retail, you're going to get some good, some bad in the next week or so. And I think that, like you said, you need something like the stimulus package to come through to push us to new highs. Because that's really the reason we're back where we're at now, right, is all the liquidity that's been added to the system. So,
yeah, and you wonder with that too, like how much of that's already priced in. I don't know. That's another thing to consider too.
Yeah, that's a good point. I don't have the answer for that. I do think more money into the system will push the market higher. I still like trading individual names right now more than just adding to like an S&P 500 fund. The real money is made in individual names right now. There's no doubt about that, which I think is probably a good segue into our next segment where we like to talk about some individual names. So I'll cover one of the trades we put on last week. So we bought the Microsoft that expire on 8/21. It was the 210 calls. Basically, Microsoft pulled back the trend line. We thought it was a really good opportunity to get in. I think we paid about $250 for those calls, somewhere in there. We already sold about 75% of our position when the stock popped a little bit. Now, it's since pulled back. It's right on trend line again, but we'll plan on holding that other 25%, I would say, till Wednesday or Thursday. I think the stock can maybe potentially push up around that 215 level if we get a good week here. But that was one move we put on last week that if you're part of our Everyday Pro Investor portfolio, you go on there, you subscribe to our service, we got in that, we made quick money on it, and we're going to continue to hold that last 25% there.
Yeah, and then building on last week's call with myself, I was speaking to Salesforce. So we did get the pullback right to the trend line. And if you remember, I purchased some puts. went ahead and sold those for a nice profit, and then we turned around, and when CRM was trading at the bottom of right against the trend line, we went ahead and bought some 202.5 or 202 and 50 cent 821 calls, and we currently still hold them. We're looking for a nice pop off the trend line again, going into this week. So hopefully we see some momentum there.
Yeah, I think that's one that, you look at it, and yes, that's short dated. I think the stock closed around 194, so it's got quite a bit of a move it needs to make to get into the money there. But if it moves, quick Monday or Tuesday off that trend line, you should see that option move up a little bit in price, and you can probably get out without even having to hold it till, like Thursday or something like that. Because I do think that, probably up around 202.50 is the limit in that move for the week. But at the same time, the 200 call probably would have been a better move, but these were really cheap, these 202.50s. And I think that's the main reason we went with it, because we knew that the risk reward was pretty favorable on that strike. We talked a little bit about Tesla already, but I think with that split, the stock's still going to move higher. You look at where it's previously traded for all-time high, and it's not quite there yet. So I'm actually going to look Monday, if the stock doesn't move too much in the pre-market, to go in and buy basically right at the money call spread early on. The stuff I was looking at currently, where it closed Friday, you could spend about $5 for a call spread, and that would give you the opportunity to make $5, so basically double your money. And I think that's a pretty high probability trade for next week.
And then moving on to a segment to speak on, we wanted to touch base on XLE. Looks like it could move higher for a trade. It's just above the 50-day moving average right now. So it's kind of, I would say it's a weaker segment out of all the segments that we've or sectors that we've covered. It's probably one of a weaker trade of ours, but there is definitely potential there, so it's worth mentioning.
Yeah, absolutely. I think that's a good point. We're not in love with that trade, but it's hard to find a sector right now that I'm really happy with, and this is one from a technical perspective that looks like it could get a short-term movement. Like you said, it's probably one of our weaker picks, but and then just another one, because XLE is not one of our favorites, and this other one's not really one of our favorites either that we've had on the show, but REMX, so it's the Rare Earth Metals ETF. Now, this one, it just broke through a downward sloping channel to the upside. Kind of looks like it's about to be a reversal for a short-term pop. The thing with this one is I like the technicals on it, but this is a very, very thinly traded ETF. I want to say the average volume over the last 10 days is about 200,000. I think Friday it only traded like 50,000. So when you get into something that trades really lightly like that, it's very dangerous to get in, especially if you buy in higher volumes. It could be hard to get out of position. You could accidentally move, you could actually move the bid-ask spread. The spreads on those can get wide. So something to keep in mind when you look at that. I still think that there's good potential there. I think if you're somebody that buys in larger volumes, it's probably not the right trade for you. Anything else you want to cover, Evan?
I don't think so. I think we covered everything for this week.
All right. Yeah, I don't have anything else either. So if you haven't already, go down and hit the like button for us. That helps us out. As well as go ahead and subscribe if you're not already subscribed. Get alerts anytime we put out a video. If you haven't already, follow us on Twitter, Instagram. Go check out our website, everydayproinvestor.com. And let's have a good week.